So also we have gold. Yes, I remember yesterday I preached about gold to Gold Club, that this gold will fall nicely, and people begin to abuse me that what is Higuhai talking about, something like that, because I don't know why people will be buying when there is 79% pullback. That yesterday, and people are still talking about buy. We went in on sale and we're able to make nice profit. You can see how I turned $37 thereabout to about $350, you know, something like that. Is the power of what we know. And so also that yesterday we have divergence in the market, which pulled the market price to downward. That is gold. Okay, today now I'm going to show you the power of this strategy I've been preaching to you guys always, most especially at the Gold Club. Pay attention to the images I'm going to be showing you right now and see the power and see how well this system works specifically for gold. And so also all the lectures in this room, pay serious attention to it if you mean this business. I've told you it's wrong to be asking, is it sell, is it buy? But by the time you finish this video, you are going to be an independent thinker and your life will turn around. Now, if you find this video helpful, please help me to click that subscribe button and so also the notification button to support me in this my community of helping traders. I am the XAUUSD. So let's go to the trading room now and enjoy this video made for gold. See ya in the trading room. Hi traders, this is XAUUSD FX. Okay, in today's video, I quickly want to teach or show you guys why I am preaching sell for gold. This is gold 4 hours time frame. This one that you are seeing here with 100, 79.62 and all that is Fibonacci software. If you know Fibonacci software, you can find it here. It's right here. Once you click it, you can bring it to your charts. And all these lines that you are seeing, they are market levels. All these lines, 23, 38, 50, 62, 79, 100%. What we have here is the low, previous low, very, swing low. And this level here is also the swing high, but there are previous lows and high. Okay, fine. This is 4 hours. Once you know what all these things are for, then we can now start discussing what is actually happening in the market with this particular instrument right now. Now, the first thing I want you to know is that when on that very day of August 3rd, market began to rally from this place, I was in it on this very day and it came down to this level, but I didn't go far with this move. I only came out just, I think, somewhere around here, and it was so painful that it dropped further. Okay, fine, but that's not where we are going. But what I want you to see is that market traveled far, paying about 1,500 pips. And after that time, this market began to pull back. All these things that you are seeing is the pullback of this move. I want you to think like that, to see it like that. It's a pullback of this move, because market doesn't go in one direction. It has to do what we call zigzagging, pullback, correct, move again and all that. So that is exactly what market is doing by going this way. It's just a pullback of this particular leg. And you see, when market got to 38%, and a bit further it came down. Market went to 50%, it came down. Market went to 62%, it came down a little bit. Where is the next level? Market is likely to reverse. That level should be the next level, which is 79%. And that's why I wrote it boldly here, that you guys can see that this is 79% level. Okay, fine. With this 79%, which I want you to think in this form, when we say market is pulling back, excuse me, when the high is here and the market move to 79% of this high, it means that market has overstretched itself. It's overstretched to rise from this low back to this level, this 79% zone. So definitely, when market overstretched to that place, let me tell you, it's already weak. Market is already weak because this is the deepest pullback market can do. You know, that makes sense for traders to get in. It has really gone far. We expect pullback to happen between 38%, 50%, sometimes 62%. But when market overstretched to 79%, it means that market is already weak going there. And another clue that you will know that you can use to identify the weakness is that when it's a bit above 62%, you can see what happened here. Look at what happened here. This is signs of weakness. It struggled to 79%, and moreover, in these 4 hours, look at 800 EMA, which is used for as a resistance also. It's lying in 79% area. That's another clue. They are converging in that area, making the area a key reversal zone. That is another way to think about this thing. So in this zone, we can never be thinking of buy, and that is what I meant by people are buying too high. Are they going to heaven? So at this area, all we need to be thinking is sell. Sell. We need to just be thinking of sell in that area. This is the sign of that weakness. Market just managed to move to this 79, and immediately market got there. Market began to reverse. Now, you know, I keep saying the bias has changed. Gold is going to fall. It's going to fall. I'm not saying it's going to fall because of these short moves. It's because of this tiredness. It has to do something like this. This is that 79 now. So I'm taking my trend line there. So it has to do something like fall back. Something like this. Since it's about zigzagging up, down, so you have to do something like that. You know, this is the move. It's pulling back. When you pull back to where it's tired, it will pull back again. So that is that. Let me remove this thing and let's move on. Now, this is 4 hours. If we now go to, in this same 4 hours, okay, don't worry. Let's go to 1 hour and see what happened. You can see that 79% that it just moved a little bit above 79. 79 just to clear people's money. Nothing. It's just to clear people's money. You see, it moved 100 p, 83 p above 79% and came back to 79% range. Exactly, you know, they usually stop point or whatever they call it. They move above it. They see people that is not coming down, and people will get in as people are preaching buy. And when they get in, they gather all your money and they kill you. That is that. Now, how do we now enter? This is where the problem is, and that's what we need to clarify. Okay, fine. We step it down further to 30 minutes time frame. Let's see whether we are going to see something that will give us the clue, because that's how you should think. We are looking for the clue now, since we are in 79% area. Exactly. You see, this is still that 79. You can see it here. Now, market traveled a bit above it. It is normal. I came back on it and traveled again to deceive you guys. How did I know? This is the trick. Look at this MACD here. When this market begin to rise from here, from this level, for instance, from that weakness side, MACD 2 is rising. And when it got to this top, MACD got to this level. When market begin to pull back on 30 minutes time frame, you can see this is 30 minutes. When it begin to pull back, MACD 2 is pulling back. When it's rising up again to deceive people that it's going further up, look at this MACD. It's not going anywhere. It remained down. This means what this thing is saying, that please traders, don't go up. I am not going. We are falling. We are falling. We are falling. We are falling because the market makers or the LP or the drivers of this market, they are pulling their money out. That is why this MACD is not following this price action. It's not following it. It remained down. Look, this place is high. This MACD is higher. This place came down. MACD came down. When this place is higher, this market price here is higher. Look at MACD. It's not moving. It's not moving. That's to tell the story that, look, we are falling. So fine. This is to let you see what I'm saying. Just look at that. Why is this side down when this MACD supposed to be doing what price is doing? Because every indicator follow price action. Every indicator follow price action. That is why when it's moving this up, MACD is moving. When price is moving this up, MACD is moving from this level to this level. When price begin to fall, MACD is falling. When price begin to rise from this zone, that's outside 79, look at it, MACD refused to. It's telling you, and we have that mentality before from 4 hours here that market will reverse at 79%, and so also 800 acting as a resistance in that zone. We have that mentality of sell. We are looking for sell clue. That is that. So when I saw this clue that wow, there is divergence, I know that we need to enter. So how do we enter? So I'm going to bring in my other tool that I use in identifying entry. That is, I'm going to put 13 right here. Let me use white color. The movement price trade below this 13, and this MACD has crossed each other. You see, these MACD lines must also cross, and that happened exactly somewhere around here. Please, traders, get in here. And that area too, you can see that this particular candle, I'm placing this thing, is acting as IB also. IB, can you see? Then if you get in right at that place, this is 122 pips he has paid nicely. We are not doing anything outside the trend. We know the trend. The trend is the gold is having sell bias. We are looking for opportunity to sell. We need a clue, and that clue is right here on 30 minutes. Even if you move it further to 15 minutes, it's just that it's longer. You can still see that movement is going. It came down, it went up, it refused here. And if it is on 15 minutes, you can get in somewhere around below this 13 here, get in, or use IB to get in and make your money. And that is why I am preaching is the bias has changed. So now, why did I now say gold will collapse? Okay, fine. This is why I said gold will collapse. Now, on the same 4 hours, please guys, I want you to open your eyes. Look at this market is rising from here. Look at this MACD is rising also. When market and it stopped here, look at the height, it stopped there. Now market pull back to this sense of consolidation or weakness. Look at it. It came down also. As it rose higher, look, it's not even as high as this area. Look at it. And it's about to cross it again. Meaning that on 4 hours, we are still seeing the same divergence in the market in line with 79% reversal zone, safe zone to sell it back. And what do we expect? Collapse. And that's exactly what I'm preaching to everybody out there. So how do I say sell, buy, and all of that? No, let us first of all know what is happening in the market and how we can get in. If I tell you to get in at so number in advance, we don't know what this area will fall to because market is moving zigzagging, and we need to use a clue to get in. It is that clue that we should look for, not the figure. The figure can change and to stop people out easily. But we need a clue. We know the zone. We need a clue. That's why I said let this candle that breaks into that 13 EMA close. When it closes, you can get in, or when you see traces of IB, IB, then get in. Simple. Make your money. Your TP can be whatever you feel that is safe for you or is okay for you. You are okay with it. It's as simple as that. So thank you for this short video. I am your Eagle Eye FX. I believe you enjoyed this short analysis. Thank you. I see you, and let's make this one together. Bye. And right here also. Okay, so you see. So see you. Bye.